Joining me now is Caleb Silver, Chief Business Editor at People and Editor-in-Chief at Investopedia. Welcome to the New York Stock Exchange.
Great to be here, and how cool is that? You got 4 elite teams with the coaches ringing the bell on an all-green day. That's exciting.
It's always an exciting morning at the New York Stock Exchange. We have pretty amazing people ring the bell here. So as trading gets underway, what are some of the biggest storylines that you're going to be following?
Yeah, well, this is really the last real Friday of the year for trading. Of course, the stock market's open a week from now, but the volume will be thin. It's also a quadruple witching day. That's interesting. A lot of gains and a lot of churning going on in the markets over the last several weeks after that dip in November. But as investors, you got to be pretty pleased with where we might end up this year. There was so much noise, so many headlines. The fact that the market is still up some 17, 18%, that's good news for investors.
That's right, and we will witness, you mentioned the quadruple witching this afternoon with Goldman Sachs reporting $71 trillion in options are set to expire. Can you break down what a quadruple witching is for our viewers?
Yeah, this is the simultaneous expiration of 4 different types of options: index options, single stock options, index futures, and index futures options, all expiring today. In other words, those contracts come due. So for those investors or traders who would bet on either a stock or an index rising or falling, this is the end date for that options expiration. So you're going to see a lot of volatility in the market right now. I think we have green screens so far, but don't be surprised to see some noise throughout the day today. That said, the market has been trending well, good sector rotation and a broadening out of the rally over the past few weeks. That's a good sign.
Yeah, and you and your team at Investopedia recently conducted its latest readers survey. What were some of the biggest takeaways, particularly when it comes to everyone's favorite topic, AI?
Yeah, well, our readers are optimistic. These are individual investors, self-directed, who put their money to work. These are investors and they love it, and they are as optimistic as they've been in several months. And they've been through a lot this year. But you know, individual investors, retail investors, have been pretty patient this year and also been buying some dips. So they've been doing that. They are concerned about bubbles in the market, bubbles especially in AI. Who isn't? That said, when you look inside their portfolios, and we always ask them, what are your top 10 holdings and what stock would you buy today and hold for the next 10 years? It's AI stocks. You see the chart there. They're worried about bubbles in AI. They're worried about bubbles in crypto and other sectors right now, but they still continue to buy the stocks that represent the AI trade. They're along that sector just like everybody else.
Any more market or economic concerns that the readers are having?
Yeah, inflation is on everybody's mind, and I think that ties into the fact that things just keep getting more expensive no matter what anybody says. Prices are just rising for just about everything. When you look at food, when you look at shelter costs, when you look at the needs, not the wants, those prices are rising and probably going to rise some more in 2026. Now, we had a tempered inflation report, the delayed one we got from the BLS this week, that showed a 2.7% increase, but we were missing a lot of data from October due to the shutdown. So I want to see the December print when we get into January and see what inflation looks like then. That's on readers' minds right now, but they continue to invest, and they've had a pretty good 3 years of this bull market.
How heavily do you think the Fed into 2026 is going to be weighing the delayed economic data that's been coming out?
Yeah, I think it's the labor market that the Fed's going to be focused on, because inflation, if 2.7% is actually where annual inflation is, it's the weakness in the labor market. You heard it from Chair Powell, but even other Fed governors, even those that have dissented from the latest opinions, they are worried about that as well. So we're not getting a ton of recent data from the Labor Department, but the private sector reports tell us that payrolls are declining and small business hiring has been declining. Don't forget, small businesses hire most of the people in this country. That plus the layoffs from big corporations, and there's been about 1.1 million of them so far this year. That's starting to weigh on people's minds.
All right, and Investopedia also released its terms of the year. At the top of the list was affordability, and I understand Bad Bunny also made the list. What are some of the terms that stood out to you?
Yeah, affordability is on everybody's mind, and it's not just about the prices of everyday goods, it's the affordability of the stock market. That bubble concern has people thinking, is the stock market affordable? Is the stock market in a bubble right now? But affordability is on everybody's mind, and it leads to a lot of different decisions. When we look at spending, and we do this across the People Inc. Publishing landscape, whether it's food and wine, travel and leisure, or Better Homes and Gardens, people are making value-based decisions. So affordability is on everybody's mind, but you also had gold as one of the top terms this year. The best performing major asset in the capital markets has been gold. That could continue into next year. AI stocks, obviously, big part of the conversation. Bad Bunny's net worth, though. Bad Bunny took the spotlight not just because of the album and the residency down in Puerto Rico, but the Super Bowl booking as well. And people are wondering, how does this young man, only 29 years young, building his fortune?
All right, and as we turn the page to 2026, what are some market-related storylines that you're going to be following?
Yeah, well, we're going to be watching the labor market pretty closely as well. And even though consumers feel terrible about the economy, when you look at sentiment, when you look at consumer confidence, we keep spending. We're really good at that as Americans. So I'm going to watch spending very closely, but I'm going to watch basket size at retailers. That's a real granular indicator, but if you look at basket size at Walmart or Home Depot, it tells you how much people are actually putting in that basket. Are transactions higher or lower? I'll be watching that as well. And also just this confluence of sports betting, the prediction markets, options trading, day trading, and crypto, all of that sort of slamming together in 2026. That should make for some interesting volatility.
All right. Thank you, Caleb Silver, Chief Business Editor at People and Editor-in-Chief at Investopedia. Thank you so much for joining us at the New York Stock Exchange.